rental cash damming for non-landlords. Getting all the benefits of rental cash damming, but you don't have to be a landlord to attain the savings in taxes and interest. Tune in as I tell you more about this new strategy. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I work with landlords to save them money in the form of taxes and in the form of the interest that they pay the banks. But today, I'm going to do something different. I am going to talk to you about a strategy where you don't have to be a landlord to gain all of the same benefits. And it's called a debt swap strategy. So let's back up. Let's go into the purpose of rental cash damming. The purpose of rental cash damming um, is to get rid of your bad debt and convert it into good debt. And what do I mean by bad debt and good debt? Well, bad debt is debt that is not tax deductible, meaning that your house, the interest that you pay on your mortgage on the house that you live in, you can't write off that interest because you use that for personal use. But if you're a landlord and you have a mortgage on that rental property, the interest cost on that rental property is a write-off because you're using it to go make more money. Remember, the whole basis behind rental cash damming is to convert bad debt to good debt. And the idea is whenever you borrow to invest with a reasonable expectation to make money, you can deduct the interest costs. So rental cash damming is a very specific strategy for landlords. Today, I'm going to talk to you about a debt swap strategy, meaning you're swapping your bad debt to your good debt, but you don't have to be a landlord. So this is how it works. Let's just say you have a $500,000 mortgage against your owner-occupied home and you are not a landlord. And you also have $100,000 in your TFSA that has been growing. So in the debt swap, this is what you're gonna do. You're gonna cash out that 100 grand in your TFSA. And then you're gonna take that money and you are going to pay down your 500K mortgage. So now you only owe $400,000. So from a net perspective, from an asset to liability perspective, you owe $400,000. So before we did any of this, where we sell a TFSA, you had a 500K mortgage and you had a $100,000 asset. So your net owing is minus 400. What I'm going to say is, with this strategy, you take your TFSA, you cash it out, you pay down your $500,000 mortgage, and now you're left with a mortgage of $400,000. So it is the exact same thing. And then what you're going to do is with the proper product, meaning that you have to have a re-advanceable line of credit, you're going to borrow 100 grand back out. And you're going to take that 100 grand and you're going to go buy investments. Now, these investments must be non-registered. So you can't put it back into your TFSA. You cannot put it back into RSP or RESP or REF or anything that's registered or tax sheltered. It must be in non-registered funds. And so now at the end of this strategy, you're going to have $400,000 mortgage that is not tax deductible. You'll owe $100,000 on your LOC, but it is tax deductible. So you're going to be getting back those interest costs in the form of tax refunds. And you have $100,000 non-registered investments. So from a net perspective, it's exactly the same when you first started off, right? You owe $500,000 on your mortgage and you have $100,000 in investments. But it's just positioned a little bit differently where now you're going to get tax benefits. So what's going to happen is every year you're going to tell your accountant, hey accountant, I borrowed $100,000 on my line of credit to go invest. I am going to deduct the interest costs. And as long as you can prove to your accountant that you moved the money from the LOC to an investment that is not registered, any interest that you pay on that LOC is tax deductible. Now, when I explain these strategies, I bring it down to the simplest terms. There are many things that you need to look out for. And next week, I'm going to talk about 3 things to look out for when you do the debt strategy, when you do the debt swap strategy. I hope you've learned a lot today. and got your brain thinking about other ways to save money. My name is Sylvia Ho, and I'm a financial landlord consultant. I work solely with landlords to help them save money. If you like what you hear every single Wednesday, please comment below, like the post, and share the post so that it will encourage me to do more of these videos for you. I will talk to you next week, and next week we're going to talk about things to look out for when you do this debt swap strategy. Take care. Bye now.